Good morning, good afternoon, and good evening, friends. In today's class, as we promised, we will get into the CA Foundation chapters one after the other. While we will continue with the bank reconciliation statement of CBSE, uh, I'll have a video also posted daily basis on the BRS as well. But we'll also continue our journey on the CA Foundation. So today we'll start taking on or discussing about capital and revenue expenses, capital expenditures and revenue expenditures, capital receipts and revenue receipts. Right. So let's first understand what is an. Let me type it down. CA Foundation. I'm in chapter 4, capital and revenue expenditures and receipts. Okay. So what is a capital and revenue expenses and what is a capital and revenue receipts? How do we determine that? So first let's take some basic concepts on this. Accounting obviously has to be presented in the more accurate manner, right? The business results of an accounting period has to be ascertained accurately, and the nature of transaction should be analyzed for us to identify what is the profit or loss made by the by the company during a particular accounting period. We discuss about various concepts, going concern concepts or accounting period concepts, etc. So the distinction, we have to make a clear distinction between what is an what is capital in nature and what is revenue in nature. How to determine that as well. So a nature of any particular transaction, any particular transactions which which is incurred and has got a potential of affecting the profit and loss for the particular accounting period has to be treated as revenue in nature. Any particular transaction which has got the potential benefit beyond 1 year or beyond the accounting period has to be treated as capital in nature. That's a crude way of explaining it. Any item which has got the potential, let me write here, taken some notes here. Yeah. A certain business results for the for an accounting period, right? This is the aim of an uh, financial transactions, right? The identifying, ascertaining the business result of account is an aim of the concern, right? Then we have to define expenses slash receipts into capital and revenue. Anything, any item of expense, any item of transaction which has got a potential to give benefit beyond the accounting period has to be treated as capital in nature. Any item of transaction which has the benefit restricted to the accounting period has to be treated as revenue in nature. Okay, then that is not end of it all, right? For example, let's take purchase of furniture. For a company dealing in furniture manufacturing and selling of furniture, purchase of wood might not be a capital in nature. Purchase of refurbished chairs might not be capital in nature, because that is purchased or that expenses are incurred on the due course of the business, running of the business, day-to-day running of the business. Whereas for any other company, like for a factory, purchase of a table and chairs, purchase of any furniture has to be capitalized. They are all treated as assets. But for a furniture manufacturing unit, that is the nature of business, right? So that should not be capitalized. So the nature of business determines what whether an expenses to be capitalized or it should be revenue. It should be based on revenue expenses, right? And second point is recurring nature of expenditure. If the expenses are going to be recurring in nature, and the frequency is also known, like it's going to go beyond the accounting period, then it should not be treated as revenue in nature, right? So it should, if it is going beyond a particular accounting period, then obviously that determines whether it should be capitalized or revenue. Like monthly salary or wages paid, they are recurring in nature, and that should be part of that affects the profit and loss of the company, so that should not be capitalized. Salary expenses. Repairs to machinery should not be capitalized, because normal wear and tear in a factory, normal wear and tear will happen, right? So normal repairs and maintenance of a machinery should not be capitalized. It should be part of the revenue, right? uh, Normal repairs and maintenance should be treated as revenue revenue expenditure. Whereas if an expense is incurred to enhance the productivity of the machinery, enhance the capacity of the machinery, expenditure to enhance the machine life or improve productivity should be treated as capital in nature, right? That's how the distinction should happen. And effect of revenue generating capacity of the business, that's what we saw in the last example. If a particular expense is incurred to incur future revenue, that it has gotten potential to get more revenue in future, that should be treated as capital in nature. The last one is materiality, the amount involved. Materiality is a very relative term. For a business with a turnover of 50,000 rupees, 2,000 rupees might be a material amount, important amount. But for a business where the turnover is say 5 crores or 10 crores, 1,000 rupees expenses might not be material in nature. So it depends upon the nature of business, materiality changes. But materiality is basically a relative term, like whether it is going to have a bigger impact on the profitability, etc. So materiality of the amount involved also has to be considered while treating an expense into capital or revenue. So let's look into some examples, right? Let's look into some examples. I'm in illustration 1. Illustration 1, page 3, right? Chapter 4. So state with reasons whether the following statements are true or false. Overhaul expenses of second-hand machinery purchase or revenue expenditure. Is this a revenue expenditure? It very clearly states here that let me color code it here. Yeah. Overhaul expenses. It is very clearly stated here, second-hand machinery purchased or revenue expenditure. By doing overhauling, we are actually doing a refurbishment of the machinery for getting future benefit. So be treated as capital in nature. So a revenue expenditure? No, that is false. It should be treated as capital in nature. Second, money spent to reduce working expenses is revenue expenditure. Money spent reduce working expenditure. It's very clearly given here in the question itself. Money spent to reduce the working expenditure. So it means that there is a recurring future benefit that it is going to come by spending this money. So it should be capitalized. Though money is spent to reduce the recurring expenditure, right? Reduce the working expenditure. It is potential. It has got it's spent only to get the future benefit, right? So because it has got a benefit earning capacity, it should be capitalized. Legal fees to acquire property is capital expenditure. For property acquisition, this should be capitalized as part of the uh, asset cost, right? Because it is incidental to the acquiring of property. It is not a separate one. It is incidental to the acquisition of property. That should be capitalized. The next one, amount spent as lawyer's fees to defend a suit claiming that the firm's factory site belonged to the plaintiff's land is a capital expenditure. Any legal fees, if it is related to an suit or any case, it should be treated as revenue. In the previous example, legal fees or property acquisition is incidental to the acquiring of an asset, but the legal fees for any case or any suit that is being filed, it's treated as revenue expenditure because it is not going to have any future benefit, right? Yeah. Amount spent for replacement of worn out part of machine is capital expenditure. Yes, definitely yes. Replacement of worn out parts. This should be capital in nature because by doing the replacement in worn out parts, it's going to increase the potential of the machinery. So it should be capitalized. Next, expense incurred on the repairs and whitewashing for the first time on purchase of an old building or revenue expenses. No. Repairs and whitewashing of a building purchased. This should be capitalized. Again, as we saw in the previous problem, property any expenses related to the property acquisition has to be capitalized, and this expense has to be amortized over a period of time. Seventh, expenses in connection with obtaining a license for running the cinema hall is a capital expenditure. Yes, definitely yes. License for cinema hall. This is a capital in nature. Because without the license, the cinema hall cannot operate, and this license has to be paid every year. And this license, without this, the revenue earning capacity is not there, so it should be capitalized. 8. Amount spent for the construction of temporary huts, which were necessary for construction of the cinema house, and were demolished with the cinema. Is capital expenditure. Yes, temporary huts. These huts are built only for the construction of the property, right? This is a temporary hut without which which is necessary for the construction of the cinema hall. That's what is given here. So because it is necessary, without which the cinema hall could not be constructed, this should be capitalized as an incidental to the property generation, asset generation, right? So we'll continue in the next class. Just in case you have any queries or clarifications, please send an email to me at babupriya@rediffmail.com, or you can also put your comments on the classes so that I can come back to you soon and clarify the doubts, anything that you have. Okay, friends, thank you and have a great day.